What's going on, guys? Welcome back to another video. Today we'll be talking about day trading versus swing trading, right? Since I got a lot of DM and emails of people wanting to talk about this. What is day trading? Let's start off from there. What is day trading? Day trading involves buying and selling financial instruments within the same trading day. The goal is to be able to capitalize on small movements of price. Like it could be anything, right? When you're day trading, you're looking to buy and sell the same day, right? You're not looking to or overnight or the next day. Basically, when the market open at 9:30, right? From 9:30 to 4 o'clock, that is where your trading time is, right? Also, when you're doing day trading, the time frame you want to focus on mainly is the minute to hourly time frame, not overly like daily time frames and all of that, right? And what are the tools you need for day trading? You need the real time chart, indicators. If you use indicators and level two data, they're not necessary, but if you do want to use them, then you could look into that also. And what are the pros of day trading? The pros is that you could see potential large amount of profit in short period of time, right? You could be able to capitalize on intraday movements. Like if there is news that come out, you could literally place a trade and sell it within the same day. And that's the pros. And the cons is like, yes, definitely is the eye stress where you have to constantly looking at your chart, making sure your stop is properly paced. And also the eye fees. What I mean by eye fees is that um you pay broker like a commission, right? So when you trade like 10 trades in a week and you pay commission on those 10 trades you're taking. So those adds up also. So day trading is not necessarily bad. It's good for people that have time to sit in front of the chart, right? If you have time, like between like 10 o'clock to 11 o'clock, if you see that you want to day trade to capitalize on the market, you could definitely do that. And also we have swing trading, right? Speaking of swing trading, swing trading involves holding position for several days to weeks to profit from expected upward or downward in the market shift, right? So basically, what this means is that swing trading involves buying now or holding for like a week or buying today and holding until tomorrow. That's swing trading, right? Anything that involves overnight, that's swing trading, right? You don't have to buy and sell the same day for swing trading. Well, you could do that if you want to, but for most people, the reason why they swing trade is because they don't have time to sit in front of the chart to capitalize on small movement. They want to capitalize more on the higher time frames. For example, that could be the monthly chart, the weekly chart, or the daily chart, right? All those hourly chart also compared to a day trader where they on the 1 minute, 5 minute, 15-minute time frame, but the swing traders are mostly on the hourly time frame, 4 hour, daily, weekly, and monthly time frame, right? And also, as you can see, the time frame days to week, the same tools, technical analysis. This is like more technical and fundamental analysis because you need to come factor in the global market in swing trading most of the time, and the process is less time consuming and more flexibility. Yes, because you could literally put on your trade right now, say your stop loss, and you don't have to look at back at your chart. Go by your day, go to your work, your job, whatever you have to do, and make sure that you're not scared looking at the chart each minute of the day. And the exposure is like the overnight risk, right? It's like the overnight risk. There could be news that come out of nowhere, right? Especially now that we're dealing with the tariffs and stuff like that. So news could come out of nowhere. That's the only risk that I see to um, swing trading, right? So what are the key differences? The key differences is holding period. Day trader close position daily. Swing trader hold longer. Time commitment and the day trading is full time and swing trading can be part time. And the risk involved, day trading avoid risk, overnight risk, and bought as higher intraday volatility. What this means is that intraday, the amount of time the price move during the day from 9:30 to 4 p.m. EST, right? And the capital requirement, day trading often require more capital due to frequent trades. True. So, which one is better? To be honest, it depends on your personality and your risk tolerance and the time and your financial goals, right? If you enjoy like making money fast, quick decisions, if you don't mind taking risk much, taking risk, that would be day trading. But if you're the kind of person that is much strategic and want to look into something that's less intense, I would say swing trading definitely. But to come at conclusion, both strategy offers potential profit, but choosing the right one requires understanding of your lifestyle and trading objective, right? You need to choose the right one that matches your lifestyle. If you work in the office like a 9 to 5 and your work require you to not be on the computer, there is no way you will be day trading, right? Because then your focus is in between two stuff. But if it's somebody else that doesn't that work in front of the computer, you know, then you could have more time in your hand to look at the computer, try to check a quick glance at what you do or what not to do during those days, right? So this will be my conclusion for day trading and swing trading, guys. I really appreciate you guys for tuning in. Guys, make sure you guys subscribe. I really appreciate you guys. Thank you.